Yeah, absolutely. It's just been a crazy ride in crypto. It just goes to show you just how volatile this thing is, and why you really shouldn't be betting more than you can afford to lose. I mean, treat it like a Foxwoods weekend or something like that, and you get
Right.
some entertainment value out of it. But man, don't put money you might need next week, next month, or the next year, or the next 3 years in this thing, because we have no idea what direction it's going to go, and we have no idea what kind of regulatory hiccups it may face, and we have no idea what Elon Musk is going to say. So,
That's right.
you put all that together in a big bowl, and it creates a whole heck of a lot of volatility that a lot of investors probably aren't too fond of.
Yeah, I really realized this week that the whole crypto market right now is like, we've talked about the whole buy the rumor, sell the news kind of pattern on this show before in the stock market, but in cryptos it's like buy the rumor, sell the news amplified, if that makes any sense. Like whatever a stock would do, like selling the news or buying the rumor, crypto does it times 10, which is really frustrating.
Yeah, I imagine as it gets more mature and there's more volume and there's more market participants, and there's more, for lack of a better term, strong hands, institutional money
Yep.
invested in it, that maybe you'll see that volatility smooth out over time. But it is absolutely, who knows where we go kind of thing. I mean, people will go back and they say, hey, in 2017, Bitcoin got absolutely hammered. And if you bought it when it got hammered, you rode it back up to 60 something thousand before this pulled back to 30,000. Just saying that in 3 weeks, you go back 50%, but and you see that across the board in all the different cryptos, they used to have this thing where if you saw it on the cover of a national magazine, it was usually the death knell, and so you look at these covers and you'd be like, oh man, they just killed it. That's the end of the rally. It's almost like the Sports Illustrated cover, Sports Illustrated jinx type of thing, only for the stock market.
Right.
And sure enough, we had Musk going on SNL. We had every newspaper talking about it. We had all of the financial media putting the little Bitcoin live ticker, right? I mean, those are all I suppose things showing that you've reached max enthusiasm, at least short term. So who knows where we trade from there? I'm still hodling my crypto experiment. I think I talked on the show about a month ago that I had sold half my Ethereum at a double when it doubled. So actually, I could actually go to zero in all my crypto and still break even on the trade because of that. Because Ethereum, I had 80% of my crypto is in Ethereum and it doubled. So I mean, that's a fortunate place to be in, but it also reinforces, Joe, that thing that we've talked on the show about before, where I like to sell verticals. When we get a vertical move in a stock, or in this case, a crypto, it makes sense to take some off the table and to put in your pocket. So if listeners, if you didn't get a chance to do that, it's a good lesson learned, right? Maybe that's part of the rules that you're writing down, because hopefully as you're learning and you're trading and you're investing, you're creating this set of rules that's repeatable and unemotional, right? And because in my career, I know that whenever I didn't listen to my rules, whenever I didn't have anything to govern it, I acted emotionally. And when you act emotionally, you lose money. 9 times out of 10, you lose money. So yeah, good lessons learned, no doubt.
You're absolutely right. And just one last thing to kind of close out this conversation. Like, there will absolutely, if this isn't obvious, there will absolutely be another one of those vertical crypto movements in the near future, probably in the next month. So hang in there, and yeah, definitely seek those out.
Yeah, no, definitely don't invest based on that though, because
no, don't count on it. Don't count on it.
Yeah, volatility doesn't, just because something goes down doesn't mean it can go up. And we've seen that actually with stocks, right, Joe? We've seen a whole bunch of these SPACs and the pre-revenue companies that maybe had a very, very high valuation that's retreated significantly. And the temptation as an investor is to say, well, I'll just ride it out. I'll just ride it out because I'll get back to flat, and then I'll sell when I get back to flat. And the thing you have to remember is that if you started here and now you're down here, well, in between here and here, there's a whole bunch of people who also bought, who are also saying, oh, if I can just get back to flat, I'll sell. So that overhead resistance as the stock is rising again is significant, because every time it's getting up to there, the people coming in and selling, people coming in and selling. And some stocks, yeah, I hate to say it, I mean, they just won't. They just will not get back. I tweeted this week, Joe, you probably saw it. I was talking, I engaged with some different people online and stuff, and I was like, you know, is it your best idea? You know, because that makes the decision a little bit simpler, right, Joe? You can say to yourself, okay, I'm in the stock, I'm down on it. I want to make my money back. Well, is that the right idea to make your money back? Or do you have a better idea? Because the opportunity cost is not, it's not just holding on to that losing stock, right? Is that money is tied up and can't be redeployed in something else that you might like better, or might recover your money faster. So don't get married to the idea. If you don't, it's not a high conviction idea for you and you have another idea you like more, consider selling it, taking the loss, and going with the idea you like more.